RJ Trades, and if you have not like and subscribe, don't forget to like and subscribe. So today I wanted to go about wheeling, right? Like it's a perfect time to basically wheel in a lot of the stocks, and I'm gonna name maybe 5 or 6 ticker which you can wheel and basically make uh, 500 to $2,000 every month with pretty much very minimal capital, right? So let's get it started. So let's start with the kind of concept. What is wheeling? So wheeling is basically strategy where you sell puts first. To sell a puts, you need like collateral. I mean dollars, right? So you need a collateral with whatever puts you are selling. Example, let's say I'm gonna show you maybe shop, which is very not that expensive right now. But if you look at the shop, this is Shopify, and what you are doing, I mean, again, we had a crazy run till 166, then really going down, a COVID low, kind of ranging from like 30 to 40, right now at 44. So if you go to options, right? So first, what we are doing is like basically selling puts, right? Selling puts. So what I usually do is like go a week or two, like 2 weeks or something. Again, sometimes 1 week, two, and kind of looking for 30 delta. So delta point 0.3, that's what I usually look around that area. And usually these tickers, right, they pay pretty good premium. So let's say if we are selling for next week like February 3, and let's say we sell like 40, right, 40, we are making $52, right? So pretty good, right? Delta is pretty low too, 0.18, right? So delta is not even that high. So you are pretty far away from the strike. Right now we are at 44, and we are talking about 40, right? That's almost like 10% down. It has to be. I mean, again, not saying it can go 10% down. Today it went like uh, 8% up, so it can definitely go down 10% in a 2 weeks. But usually the thing is like you will get stocks at least, right? So your cost basis is that's willing, so you get assigned, then you start calling selling calls, right? So let's say you take this, right? So what you are doing is like by selling puts, you need how much collateral? You need 4,400 collateral, right? I mean 4,000 collateral, but you are getting $52. So basically that's a pretty good return in 2 weeks, right? So if you really calculate like $50, let's say $50 for that 4,000, that's like almost 1.25%. So if you could make like a percent in 2 weeks, that's great, right? You'll be making like 26, almost 30% in a year, right? So that's pretty very it's not like a wild options, and you get the stocks and whatnot. So it's a pretty good strategy. Now you do this, right? So uh, and now once you are assigned the stocks, right, if you get assigned, so basically meaning if the stock goes below $40, you will be assigned. You have to buy shop shares, 100 shares of shop at $40, which gonna cost you $4,000. But you still have the stocks, and also you collected 52, so your cost basis is basically 39.48, right? 39.48. Now what you can do is, let's say it's hovering around 38, 39, you can sell like covered calls. For now you could do covered calls, right? Now you could do sell call because you have 100 stock, and you could choose something like, let's say if you choose like same thing with the 44, you made a premium $200. And if you're assigned at 44, you also make $400 in the stock. So 600, sometimes it just helps you, right? You get assigned, you're selling, like you made quick bucks, almost like 500,000 within a 2 weeks or something, if it kind of acts in your favor, right? So you could do this strategy and just basically create some passive income, right? Again, if you be very aggressive, you may get assigned much, but you could be non-aggressive, and if you want to hold the shares, you could select something like 50 or something, right? In that case, think about it, like you sold 50, I'm just saying 50 for or like 49, 48, like let's say 49, you sold at 40. I mean, you made like $41 there, but on top of that you also made like $4,900 by selling your stocks, because you got it like $40, right? So that's the whole thing. So basically you start with, you sell puts, If it's not assigned, great, you collected the premium. If it's assigned, you start selling calls, right? You collect premium both way, and you, if you repeat it, you can make a healthy return, right? So this is a great strategy. And right now a lot of stocks are really down, right? They are not right highly very valued. The I mean, they are basically, if you get assigned to, it's pretty good time, right? They are not like you got assigned Facebook at 179 and it's going down again. I'm not saying it cannot go down, it can, but basically it's like the upside is a lot more than the downside, right? If you look at the Meta, we already hit this COVID low, kind of below, but we just kind of peaking out, just crossed it. So now it's going to be a new support, right? Now it's going to be new support, and I think like we have a lot more upside than the downside. Earning is coming, so gotta be careful about that. But other than that, a lot more. So Meta is one thing, and other thing is like it's not 30,000 you need, like you need like 14,000 right now, which is again a great thing. Same with the Amazon and Google, right? With the stock split, uh, same, right? Amazon, we hit like literally COVID low, 84, but we are kind of struggling around this area, kind of 100, but still we are way below. And you could do the same with the Amazon, right? Like really great stocks, if you are thinking, if you get assigned to, you can really hold on to. Same with the Google. If you if you go to Google, same thing, right? Google has not been that bad, like it's well above the COVID low, but it's a really in a great shape. And they just laid off a lot of people, so which is really bad news for the people, but kind of good for the company, right? Like they reduce their expenses, and still we are in a downtrend. Let's see if we kind of break this downtrend. But Google is another stocks, which is basically, if you need 10, if you have 10,000, you can do that. But if you don't have, you can pick stocks like, Sharp. I think Datadog is 80 or something. So Sharp, that's one name I could think of. The other thing is Datadog. Datadog. That's a, I think like a pretty decent company, doing really well, right? So Datadog. What else? I think we have some others too. Maybe I'll. But these are like, even there's like some ticker like Lemonade. I think Lemonade was really highly valued at one point. I mean, you remember we traded, like I even traded it like 100 something, and but now it's like really, uh, seems like it kind of picked the bottom, and right now kind of hovering around. So you could do that, right? Like, and the other beauty is, let's say you got, right, like you sold, and it's going really down, right? You can always close your positions. You don't have to wait till expiration and basically get assigned. You can just close out with a little bit loss. For example, if you got credit for, let's say, $100, and now it's like $200, you buy it back, right? Like you lost $100, but you don't need to worry about assignment. You can repeat the same thing again, right? So that's it for today. That's all I wanted to cover. If you guys have any question or comment, let me know. Other than that, have a great day, and let me know what video you want me to cover next. Thanks.